El-ERIAN warns of impending mayhem. Mohammed El-ERIAN is an Egyptian-American economist, businessman, and chief economic advisor at Allianz, a European multinational financial services company. He is also the former CEO and co-chief investment officer of PIMCO. In terms of the economy, he explains that a recession will hit the economy in 2023 and the Federal Reserve will raise interest rates to combat inflation. He also discusses the short and long-term impact of these rate hikes on the U.S. economy as a whole, gives an in-depth look into the current economic situation, and explains the factors contributing to the risk of an impending recession. El-ERIAN warns that 2023 is a year of reckoning and problems, and the recession that will hit the U.S. will be more severe than we anticipated. Hello and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we start, make sure to leave a like, subscribe, and comment below if you enjoyed watching this video, and turn on the notification bell to keep posted. And now, without further ado, let's start. If you're an investor who has been keeping tabs on their retirement and investments this year, you may have noticed that both your equities and bonds, which are intended to act as risk buffers, take major hits in the first half of the year. It resulted in massive issues with returns and severe negative correlations. And when people look at their first half statements, it's easy to see why they were so outraged, according to Mohammed El-ERIAN, who says this reaction is quite normal. When we break down headline inflation into its constituent parts and analyze the factors that have been pushing it higher recently, we see that energy and food prices are weaker drivers of inflation. El-ERIAN also predicts that while the headline number will decline, the core number will remain alarmingly high and reflect an inflation process that has spread across our economy and grown more entrenched. It will, however, fall down towards the end of the year and be sticky. However, El-ERIAN claimed that he is more worried about the unintended consequences of declining inflation since the Fed has been so slow to act. The Feds began to make mistakes approximately 15 months ago when they definitively adopted the concept of transitory while it was an open question. El-ERIAN contends that had they listened to businesses, they would have been much more humble in admitting that they do not entirely grasp the mechanics of inflation. This is because companies were warning that supply interruptions, such as supply chains and container ships, would not be resolved quickly. However, the Fed fell into a cognitive trap when it became fixated on the notion of transitory. At some point, it became pretty evident that inflation was a concern, yet the Fed carried on reiterating that transitory notion. It could have done more, but it ended itself in the ridiculous situation of continuing to inject cash and engage in quantitative easing. Terrible analysis, bad forecasting, and miscommunication got us into this mess, El-ERIAN added. In addition, there are two significant dynamics at play. One is a demand-supply relationship. El-ERIAN asserts that after a period of deficient aggregate demand, we are now experiencing inadequate aggregate supply, which will eventually resolve itself. But there is another phenomenon at work, the changing nature of globalization. According to El-ERIAN, this change from a highly intensive concentration on efficiency to a focus on resilience is inflationary by nature. However, it is not yet completely developed. Thus, it is essential to ensure that the dynamics of inflation do not grow particularly deep roots throughout a large portion of our economy. If not, we risk experiencing a low-growth, high-inflation situation for much longer than is necessary. Meanwhile, El-ERIAN believes that central banks play a crucial function, and the reason he is so critical of them is that they have been given a lot of authority that entails a great deal of responsibility, including the ability to make independent decisions and have political autonomy. El-ERIAN thinks that politically independent central banks are necessary for economic well-being, but they must operate properly and be honest when they make mistakes. They are expected to make the public aware of what they have done in order to prevent themselves from making the same mistakes again. On the other hand, when the Fed releases its quarterly estimates, former Fed officials are among those who refer to them as laughable. Hence, El-ERIAN believes that we must return to a situation in which the Federal Reserve is credible, since this is very necessary for the health of our society. On the other hand, El-ERIAN's definition of a recession is a more comprehensive one, since it extends well beyond 2 consecutive quarters of negative GDP. "We are not yet in a recession," El-ERIAN declared. "The labor market is too strong, the consumer spending is too strong, and the business volunteers are too strong. We simply are not in a recession. But is the risk of a recession high? Yes, it is, and it is getting higher." According to El-ERIAN, there are 2 factors that increase the likelihood that the U.S. will experience a recession. 1. The Fed is raising interest rates into a slowing economy, and 2. A recent IMF forecast revealed that all of the major global economic sectors are slowing down, or in the IMF's words, gloomy and uncertain. As was mentioned earlier, there is a strong likelihood that our economy could enter a recession. As a result, El-ERIAN believes that there are and should be a variety of actions taken across 4 areas in order to prevent our economy from entering a recession. First, according to El-ERIAN, to control inflation, the Fed must not only tighten its monetary policy, but also re-establish credibility, because its forward guidance at the moment is essentially meaningless. Second, we must target fiscal policies to safeguard the most vulnerable sectors of our society, as they have enormous economic, social, and political ramifications. Third, several pro-growth and pro-productivity reforms must be implemented, including raising the labor force participation rate and enhancing supply chains. Last but not least, we need to pay attention to the risk associated with financial stability and how it has not only shifted from banks to non-banks, but also how non-banks have been driven by years of negative interest rates and massive, unexpected liquidity injections to take risks far outside of their comfort zone. Overall, if these 4 areas are not effectively addressed, they might worsen and hurt the economy. Although they don't have an immediate impact, they are crucial since they ultimately help the supply side function. Additionally, El-ERIAN thinks that there are several opportunities for public-private partnerships and that we can do more to improve supply chains. He went on to say that we should learn from the positive things that occurred during the pandemic in terms of how public-private partnerships can function incredibly well. He said this in reference to the fact that we should take these lessons into consideration. We are confronted with a global issue, which makes collaborative action crucial. Nevertheless, if you look into the future, there are some silver linings as valuations are becoming more reasonable and we are beginning to see entry points for excellent long-term investments. In addition, as interest rate risk, inflation risk, and recession risk have all played out, bonds are once again playing their traditional role of mitigating risk. El-ERIAN, on the other hand, says that we were very close to having a third risk factor that would have come along with inflation risk and recession risk. The third risk factor is called market functioning risk. Although there were times when liquidity was severely constrained, the markets held up and we were able to manage the repositioning that people wanted to do. We've weaponized the worldwide payment system in the absence of any standards, safeguards, or other precautions. El-ERIAN warns, however, that if we're not careful, we could end up fragmenting the global economy. On the eve of Russia's illegal invasion of Ukraine, the idea that you would impose sanctions on its central bank, exclude it from the payment system, and forbid it from selling it was nearly inconceivable. That is the nuclear weapon of sanctions, claims El-ERIAN. We know that sanctions on individuals and trade are very powerful. Without carve-outs, an economy can be brought to its knees. Imagine for a moment that you were suddenly unable to use any of your credit or debit cards, and that the only thing you had left was a little amount of cash, but someone told people they could no longer take your cash as payment. No matter what you try to do in terms of paying or receiving, you won't be able to. Such is the strength of the payment system sanctions. Thus, we have ultimately weaponized a very powerful instrument without the necessary safeguards. As a result, El-ERIAN urges everyone to take the situation seriously since the global financial crisis and inflation will soon consume the economy. Hi! We hope that watching this video was interesting and that you learned something valuable. If you enjoyed it, please hit the notification button, like, subscribe, and watch more of our videos. Also, don't forget to share your comments in the comment section below. This is Finance Sense, helping you stay current on all the most recent changes in the financial markets and economy. Stay safe and look out for the next video.